I hope you had a beautiful weekend. I hope you had a great Monday, even though the market was crazy. Welcome to today's live level up conversation. Let's get started.
Welcome to Level Up with Winnie Sun. Award-winning financial pro. Get ready. Level Up with Winnie Sun.
Hi, friends. Happy Tuesday. Welcome to the show. I'm Winnie, your host, an award winning financial pro, a Forbes contributor, and a CNBC council member and contributor. Had to put that in there because it's important, right? Because we love our friends at CNBC. We are streaming here live on many different social media platforms. So jump in. Introduce yourself. Let me know how you're doing. If you're catching me at lunch, what are you having for lunch? I want to hear about that too. Now let's talk about where the market is. It's still open, not quite closed yet. We've got about 15 minutes left. Currently, the Dow is in the positive of 536 points. Nasdaq's up 269. S&P 500 is also up 88 points. I think it's a good day. What do you think? I think it's a good day, especially given the last couple of days we've had. Of course, we knew that the tumble was that bound to happen at some point, which is probably maybe you didn't think about it happening this beginning of August. But nonetheless, the Dow has rebounded. Of course, major indices showed lots of strength today. Actually, the Dow is up over 700 points just not that long ago. But nonetheless, positive is positive. So you see a lot of the familiar tech names are in positive territory today. And actually, it wasn't completely surprising because even yesterday, late in the day, and late last night, I was watching the futures in Japan already started to look good, and U.S. futures also look good. The Bank of Japan's interest rate hike, of course, has influenced global markets, which of course led to volatility last couple of days, and of course a rise in the yen as well. So people are looking at, is there going to be continued volatility? I think it's pretty fair to say that we should expect more volatility. And if we get great days like this, then I think I'll be happy. But I think you should assume that if you're investing in the stock market, there's going to be days like you saw the last couple days, right? And so what you do with that information is really up to you. But I will tell you this, days like the last couple days also give us opportunities for those of you who've been on the sidelines waiting to invest. Well, it gives you a lower entry point than few weeks ago. So keep that in mind, right? So we're definitely seeing a lot of momentum in terms of the stock market today. And of course, San Francisco Fed President Mary Daly came out and talked about indicating that a potential rate cut later this year definitely looks like it's in the horizon, and certainly something that the Fed has in their arsenal to be able to keep cool in the labor market and also on inflation as well. So hopefully inflation continue to go lower, and that way perhaps the Fed will decrease rates in September and maybe even sooner. That'd be really great. I don't know if it will happen. I don't know anything, but I will say these are the things that we're paying very close attention to. And speaking of things that we're also paying attention to is the one and only Warren Buffett. Warren Buffett, the article came out today on CNBC by Ryan Ermey talking about what's going on in the financial markets, and also that the S&P 500, of course, has experienced a significant drop the last couple of days, down 7.5% from its all-time high on July 16th, which, let's be honest, was just a couple weeks ago. It wasn't that long ago. But Warren Buffett is coming out to talk to you. And he's saying that if you're watching the financial markets, the stock market, and you are getting worried and you've been stressed out the last few days, well, maybe, just maybe, you shouldn't be so invested into the stock market. And perhaps it's important to remember the long term rule of long term investing and not to react so quickly every time the stock market has a pullback, which, let's be honest, if you're investing, you've been investing for some time, there's been a lot of pullbacks, but maybe you just weren't paying attention to so many of them because maybe they were happening slower versus so dramatic like we saw in the last couple of days. So Warren Buffett's, investment Berkshire Hathaway, they've made a lot of changes to your own portfolio. And he's stressing that if you are a long-term investor, that you should focus on that overall trend of investing long term rather than the day-to-day movements, which, let's be honest, he and his team are paying attention to those day-to-day movements. And so, but he has a lot of experience. He's been investing, he's like, what, in his 90s now? So he's been investing probably a lot longer than you have. So he has the experience to know that he's investing long term and that these day-to-day changes don't freak him out. And perhaps if they freak you out, you got to get used to knowing and understanding that whenever you invest, you put your money into investment that's in a company and they're focused on growing and producing profits, that you got to be patient. And that's key. So Warren Buffett is saying that he recommends, of course, buying things at a discount. And let's just be honest, the last few days we've had some discounts. And so perhaps you've taken some of his advice. But I will say this, I think it's really important to make sure that you're diversified. And if you're going to be investing, to do so with a professional. Look for a financial advisor that really knows, has a lot of experience, 10 plus years of experience, and make sure that you're invested with good guidance on that as well. And to utilize a strategy that we're a big fan of called dollar cost averaging. Also, one that Warren Buffett recommends you employ as well, which is where you invest a set amount regularly, maybe once a month, maybe once a quarter, but have that consistency. That's kind of like the 401k method. If you have a 401k or 403b at work, that retirement plan that's they're designed for you to save for retirement. Well, that strategy of investing bit by bit, that's called dollar cost averaging. It's a great strategy. If you're not familiar with it, I highly recommend you look into it for saving for important things such as your retirement, education for your kids, all that good stuff, maybe like a future home in the future, your down payment, things like that. This is a great way to invest, where you invest a set amount every single month and sort of set it and forget it. It's a great way. Sometimes you'll invest higher, sometimes you'll invest lower, but overall, it'll continue to help you invest it without overthinking the investment too. But make sure it's in a nice diversified portfolio. And I see you, Vicky, joining us on Facebook Live. And thank you so much for all the shares that you've done for me and the team as well. We really appreciate it. So let's continue. All right. The other thing that I want to talk about, of course, is sort of a lot of speculation. And this is being shared on the New York Times, talking about how people are wondering if the Fed could make an emergency rate cut. All right. So we know that the Fed hasn't been shy about that. They've been very clear that they could potentially give us a rate cut in September. The New York Times is now reporting that they could actually do an emergency rate cut sooner than that to stop and reduce some of the global sell-off that we've seen in the last couple of days and the ongoing concern of a recession. Yes. Now, for those of you who've been investing for some time, a recession isn't a new thing. It's not a new concept. It's been discussed many times on this show and also on many other financial publications and networks as well. But that being said, the Fed could use to its disposal an emergency rate cut, even before a scheduled September 18th meeting that we're expecting to hear some sort of news of a rate cut. So despite recent markup volatility and, of course, rising unemployment, people are very concerned about what's going to happen with their money, the money that's invested. And so the Federal Reserve does have what they have in their disposal, which is an unscheduled rate cut. They have that ability to do that for extreme situations, such as what you've seen in the last couple of days with extreme fallout of the financial markets, right? We've seen some days where the market was down over 750 points, down 1,000 points. I mean, these are really, really scary numbers, but do remember that the Fed does have this in their disposal. So rates have been holding strong for about 5.3% for a year, which could potentially impact, of course, the labor market and demand and things like that. But there are tools that the Federal Reserve has at its disposal to keep things from getting into a full-blown recession. So I just wanted to keep that on your radar as well. Now let's segue and talk about some other company news, because I know you all love this news, because I get a lot of comments coming back from you telling me that, did you hear about this company or that company? Well, I've got some news to share with you on that too. Google is making news. This is being shared on NPR and amongst all the other financial publications as well. Um, Talking about losing their massive antitrust case over its dominance in search. Raise your hand if you use Google to search. I definitely do. And I use Chrome as my main browser as one. And many of you might as well. I'm actually looking at other browsers too in terms of more safety. But so the U.S. District Judge Amit Mehta has now ruled that Google's dominance in their search engine, like dominance, right? Kingdom illegally exploits its market dominance. And so this is actually causing issues with competition and innovation. So this decision by the courts is major because this could significantly alter not only the way that you search and where you search, but also the entire internet landscape, if you will. And this could potentially require Google to dismantle parts of its operations or actually cease default search agreements, which is kind of crazy considering how much many of us depend on our searching and Google. And if you think it's going to rely with just Google, you're probably mistaken, because these rulings, then they're going to look at other companies as well, that we search as well. So Google plans to appeal, of course, arguing that its dominance is due to consumers like you and I preferring their superior search engine. What do you think about that? Do you think that you use Google because of their superior search engine? I think for me, I would actually argue that that's probably true. I really do like it. But I will say this, the fact that Google is also preferred platform for many of us in terms of email, right? That's a big one. And also that many of us also use our Google credentials as a way to log in to many of the tools and internet tools that we use. And so therefore, instead of learning, let's say, 50 different passwords and having to record 50 different passwords, many people use their Google credentials to log into tools. So this is one of those things that you're going to have to give pause and think about. This is a big one. So this ruling is very significant win for the US Justice Department, because they've been really honing in on big tech and how they're going to continue to regulate this. And of course, the tech companies want to stay in control, but the US government also wants some level of control as well. So yeah, the next legal phase will, of course, now determine whether penalties or structural changes need to occur. And so Google's practice is spending billions annually to secure default search settings on devices such as your smartphone. Now, these are becoming a key factor in maintaining their monopoly. And so the government is probably not keen on that, but Google is also spending a lot of money to make sure that they can stay dominant, but they're also spending a lot of money to reinvent the technology that we enjoy using as well. So companies such as Microsoft obviously could benefit from Google's reduced dominance and even could potentially gain more market share for their own search engines as well. So this case is part of a larger antitrust movement against major tech companies. So I want to hear what you think. Do you think this is for the better of our privacy and our information? Do you think it's good that there is more competition? Do you think this is going to negatively impact Google, or do you think they're going to reinvent and just become stronger in other ways? But this is, of course, reflecting increasing regulatory scrutiny under the Biden administration. Now, whether that's going to continue, depending on who gets elected to be president in November, that's something we'll have to wait and see. But I want to know what you think. What do you think about that? Do you think that this is big as I'm sharing now? Or do you think, nah, Google will figure it out? I want you to put that in comments. Yeah. So yeah, Vicky was saying what happened to Yahoo search and also what new Gemini AI tool Vicky is sharing on Facebook. Yeah, that's a good comment. I'm curious to see how you feel about that. Now let's talk about Disney. Disneyland, Disney World, and now of course Disney Plus and ESPN Plus and all that stuff, Hulu. Well, remember when it wasn't that long ago where they literally made Disneyland so expensive? I haven't been to Disneyland in a bit because the prices went up, but also just I don't like crowds. And I don't know, have if you've been to Disneyland lately, let me know. Did the increase in prices did it reduce the crowd so it feels more comfortable? I will say that my son went with his friends not that long ago, and from what I heard, the crowds were still just as intense. No, I know. But here, this is an article shared on CNBC by Justine Fisher talking about now Disney Plus is going to be increasing their prices as well. So they're talking about an increase of like $1 to $2 more a month, which you might think isn't that much given that now like a Subway sandwich could cost like almost $20. But nonetheless, it adds up, right? A couple dollars a month, multiply by 12 months, multiply by how many years you keep these subscriptions, they can really add up. With live TV plans, they say might even see a $6 increase as well. So Disney Plus Basic is going to be priced now at about $10 a month, and Premium is going to be at about $15 to $16 a month. Hulu with ads is going to cost about $10 monthly, and without with ads it's $10, and without ads it'll be closer to about $19. And ESPN Plus for you sports fans out there is now $12 per month. So of course, they're encouraging customers to opt for these bundles. They want to get more of your money, your streaming dollars. So Disney Plus and Hulu, they're going to bundle with ads and whatnot. So let me know, for those of you who are watching, which of these you subscribe to, and is that going to impact whether or not you renew? Do you feel like there's at a point where it's just too much? Because $1 here, $2 here, $6, it all starts to add up. But remember the days where some of you might not remember, but some of you might remember there used to be free TV and we were like bombarded with ads all the time, and they were kind of annoying. I was just telling my son actually this morning, I'm like, back when I was a kid, we didn't like eat all this organic. So we were like, I remember eating bologna sandwiches and like the song would be in my head and he'd be like, well, why did you eat all that stuff? I'm like, because it was always on TV. We always saw these ads for bologna sandwiches. And so that got me thinking, and my friends were eating it in school, and that's what we did. But now we are offsetting having so many ads, but of course the cost continues to go higher, which it wasn't that long ago when we were in that keen about paying for cable TV. And now it's like it's come a full circle where things are just costing more and we're getting used to paying for more things per month. But it's not a good thing. For those of you who are trying to rein in your budget, my tip for you would be this: commit to one streaming service at a time. Maybe you could toggle every 6 months or every year. But given that you only have one set of eyes and only so much time, watch all on one thing and then go to another thing, and it'll be fresh, it'll be new, it'll be fun. And it could be a good thing. All right. All right. So my last story that I want to share, and I say this one for last because this is one of those things where like, you did what? What did you do? Okay. Well, Elon Musk, his company X, formerly known as Twitter. I think we can all agree that Twitter was a better name, but now it's called X. X is suing advertisers. Yes, the people that pay for advertising on Twitter. Well, now X, Elon Musk's company is now going to sue them over alleged massive boycotting of the platform after Twitter became X. This is shared on CNBC. But get this. Elon Musk's social media platform X, formerly known as Twitter, has now officially filed a lawsuit against a group of advertisers claiming a massive advertising boycott that deprived their company of billions in revenue and violated antitrust laws. This is one of those things where, like, remember the old saying, that the customer is always right and that you treasure your customers and you take good care of them. And like that's how you earn business over time. But in this case, X is going to be filing a lawsuit. They have filed a lawsuit, filing in federal court in Texas, naming the World Federation of Advertisers and companies such as Unilever, Mars, CVS Health, and many other companies. They're accusing the advertising group's initiative, the Global Alliance for Responsible Media, of coordinating a full-blown pause of advertisers following Elon Musk's $44 billion acquisition of Twitter and the the end of 2022. So Elon has announced this lawsuit on X, declaring it is now, quote unquote, now it is war. After 2 years of trying to get a better relationship with advertisers and have a positive relationship, now it is war. In fact, X's CEO Linda Yaccarino has cited evidence from the U.S. House Judiciary Committee claiming that a group of companies organized a systematic illegal boycott against X. So, yeah, I can think about that for a moment. I mean, I feel like if you're an advertiser, aren't you a customer? And don't you have a right to advertise anywhere that you want? But I'm not an attorney, so I don't know. I'm curious to see, how do you feel about that? How do you feel about this story? So the Judiciary Committee recently is going to be hearing a hearing to examine whether current laws are adequate to deter anti-competitive collusion in online advertising. I would think that companies would have a right to advertise if they want to or not. And let's just put this out there, like, could you actually force people to continue to advertise on your platform? I don't know. I don't know the whole ins and outs of this lawsuit, and I don't quite understand it enough to speak about it intelligently. So I'm asking the question for those of you who do. What is it about this case that makes this have legal precedence? And on the bigger picture, like, I don't imagine if you're going to sue your advertisers that they would come back. So what is sort of the plan for this, to get back some of the $1 billion that were lost due to the boycotting of advertisings? Obviously, the advertisers probably wouldn't be that excited about coming back if you're suing them. But yeah, curious to see how you feel about this advertiser exodus that occurred in 2023, that they are going full on war. And Elon is accusing the fleeing advertisers of blackmail and use profanity to tell them to leave. This is according to this article that I read on the subject. So once again, curious to see how you felt about that. But let's talk about that. Vicky is saying freedom of press. Yeah, I don't know. Freedom of press, freedom of advertisers. What do you think about that? Okay, the market has closed. Let's let you know where it closed at. The Dow closed up 294 points in the positive, certainly, but it was up a lot higher earlier in the day, so that has shifted. The Nasdaq closed up 166 points, so that's great. S&P 500 also up over 53 points as well, and so that's good. A positive across the board. I think we certainly like that news given what happened the last 2 days with the financial markets. But with that, I mean, let's just chalk it up as having a great Tuesday. I hope you have a beautiful day. Thank you so much for tuning in. I certainly appreciate your time with us today. We're going to come back again this week with more updates, more news, and of course, more things that might be of interest to you. And to watch more past full episodes of Level Up with Winnie Sun. Level up with Winnie Sun. Definitely check out NASDAQ, Amazon Fire, Samsung, LG, Roku, and many other platforms. And thank you so much, Vicky, and many of you for tagging at Winnie Sun to show your support so I can properly thank you on a future episode. And definitely check out Yes Factor with Winnie Sun, which is my podcast on Apple Podcasts or wherever you tune in on your podcast. With that, be well. I'll see you very soon. Take care now. Bye-bye.